It's time for a market update. What's going on around Australia? Let's take a look at some of the data that CoreLogic has released. Let's chat about interest rates. What's going on with the cash rate? Where are we heading the next 6 to 12 months? And how can you manage your finances in a more efficient way to make the most of the debt you have access to, your serviceability, and manage your current portfolio or look to grow a portfolio? As you can see on screen here, the cash rate has risen up to 3.6% on the 8th of March 2023. So we've gone from 0.1%, almost nothing, all the way up to 3.6%, and we've seen inflation data start tailing off. As you can see here, the RBA has increased the cash rate by 0.25 basis points for every month since October 2022. Now, we obviously had that skip in the raise because the RBA didn't meet in January, but ever since October 2022, we've had a 0.25% cash rate increase. And so what's going to happen? Are they going to do another 0.25% increase, or is there going to be a hold on the cash rate? And if there is a hold, is everyone going to start flooding back into the property market, and is the sentiment going to start to turn? Now, my opinion is they probably are going to put a hold on the cash rate increase. There might be one or two more this year in terms of 2023, and then we might see those cuts start happening late 2023, early 2024. To be perfectly honest, at this point in time, it's anyone's guess, but we know it's likely that the cash rate will continue to sit between 3 to 4% in 2023, even if they do have some cuts late in the year. So let's take a look at some of the property data across each of our major capital cities and compare Brisbane, Sydney, Melbourne, and all the other major capital cities across Australia. So as you can see on screen here, here's the rolling 4-week change in dwelling values since the first rate hike as at March 2023. So this goes from May 2022 all the way through to March 2023, and it looks at the movement in dwelling values since that point in time. So month to month, you can see there's a decline in the growth of property prices. And then we've started to see a decline in property values from September all the way through till Feb 2023. Now, it looks like the market has had a turn between Feb 2023 and March 2023, and there's an upward trajectory from about December 2022. So a lot of commentators are calling the bottom of the property market around November, December 2022, based on CoreLogic's data and based on the movements in median prices. You can see across all the capital cities for March, Brisbane remained steady, Adelaide had a slight drop, but they've had massive amounts of growth the last 2 to 3 years. Perth remained steady, Melbourne's slightly up, and Sydney's up 0.8% for the month. For any of you into trend analysis, you can see that we were on a clear downward trend across all major cities, including Brisbane. Brisbane had quite a strong decline in the rate of growth across median values between May to September 2022. There was then steady declines month to month around that 1.8% on that rolling 4-week average, and now we're starting to see that pull back where we're not really seeing any change in property prices at this point in time. So this is a pivotal point in time across all major capital cities. We're seeing that there's been a slow in the growth, a then decline in the median values, and now we're sitting at that key point where each of the major cities aren't growing, but they aren't declining. So the market has stabilized at this point in time. Now, the speculation is whether these are going to continue back up in terms of the monthly growth, or if they're going to continue to fall. And this is dependent on so many factors, which in my opinion is why you shouldn't speculate on the next 3 months, the next 6 months, or even the next 12 months, which is what we're looking at here. I personally want to speculate over a 5, 10, 15-year horizon. I want to add value to my projects as well to fast track the journey and pull out equity. So using a mix of the market's growth over the long term and manufacturing value in the short term to build a portfolio. So I absolutely think it's too early to call the market as having turned around, especially given that we're in a higher interest rate environment and the cash rate is likely to go up at least another 0.25, if not another 0.5% this year. We are expecting cuts from the RBA in the next 6 to 12 months as well, but I don't think that means that we've had a full turnaround in property prices. As a lot of you might know, Emily and I are actually undertaking a flip project at the moment on the north side of Brisbane. And we bought that property in November 2022 with a settlement date in January 2023. So if you're looking at this data and looking at Brisbane on the graph, you're probably thinking that we timed it perfectly and we bought at the bottom of the market. Now, we weren't exactly thinking like that. We were looking to deploy the capital to add value to a property. We obviously wanted to document the journey for the YouTube channel, but I don't think anyone can perfectly time a market. You can generally look at timing and you want to understand, based on the information you have available, based on the capital that you can deploy and based on your serviceability, what's the next best step. And so you need to look at all those factors, look at your personal situation, and then take action. If you're going to sit on the sideline forever, you're going to essentially leave your cash in the bank and it's going to slowly devalue over time. There are times where it does make sense to hold more cash or hold less, depending on your risk profile and how aggressive you want to be in terms of growing a property portfolio. But for Emily and I, even though it looks like we might have inadvertently timed this dip, we weren't going out there specifically to do that. We were looking for a property that seemed like a great deal. We were looking at the median values in the suburb, what this property was going to sell for. I won't reveal that to you now, but when the flip series comes out, we're going to share all of the numbers. But we wanted to buy significantly below the median value in that suburb, add value, and then look to sell at or above the median value in that location. So let's take a look at some of the other market data, given that this is a market update. And this is the consumer price inflation from the ABS/RBA. And this shows you over a large period of time, the inflation year to year. So 1970 all the way out to 2022. And you see the big spike up here. We're around about that 7.5% mark. And that was around Christmas. So based on the most recent data we're expecting to see, we are expecting to see inflation pull back. Rates have increased significantly. We've had 10 consecutive rate rises and we're looking to potentially have more. And I think inflation, or the CPI, is going to pull back in the next quarter. Now, the target band for the RBA is 2 to 3%. So if we're sitting up anywhere between 5 to 7%, the RBA is still going to want to put pressure on the economy to reduce inflation back to that target band. So I do think they've got a handle on inflation. I think people's budgets are tightening, but I don't think we're there yet in terms of getting back to target inflation. Now, another data set in terms of the markets across Australia that I think is really interesting is new versus old listings. The really interesting point here is you can see that the new listings year on year are down, which means there's less stock in the market in terms of new listings. So looking at Sydney, Melbourne, Brisbane, Perth, Adelaide, Canberra, Darwin, and Hobart, the average is down 11% in February 2023, compared to the year before in February 2022, which a lot of people were saying is the peak of the property boom. So with the reduced supply, you can see that Sydney's listing stock is down 20% compared to the prior year. Melbourne's down 17%, Brisbane's down 11%, Perth 10%, and Adelaide 2.4%. So with the lower stock on market, it's really interesting to see that across most of the major capital cities, we're well down on the peak in February 2022, with somewhere between 10 to 20% falls in stock listings in the current month that are less than 30 days old in Feb 2023. Now, this really bodes well for people who are looking to sell or people who are holding onto their own homes. Homeowners are not wanting to sell in this higher interest rate environment. And this means lower stock, which obviously property is a game of supply and demand. So we've got a situation where supply is less, but the demand is at or increasing over time. There's talks of immigration opening back up and the government opening the floodgates for more skilled immigrants to move back into Australia. There's talks of a rental crisis at this point in time. So in my opinion, we're seeing demand continue to increase, but the supply in terms of listings on market and what we're seeing in the construction industry in terms of physical supply coming in the next 3 to 5 years, in terms of the pipeline, is down, is suppressed. So if you're looking to buy property in established locations, which are in demand, based on the factors, based on quantitative data, based on qualitative data, that's where I see opportunity in these markets. Now, there's so many factors when it comes to looking at each of the major capital cities: Sydney, Melbourne, Brisbane, Perth, Adelaide. Those would be the top 5 for me. Now, at this point in time, I think Sydney and Melbourne are still overpriced. If I was looking across Australia, I'd be looking at the major capital cities that aren't Sydney and Melbourne, so Perth, Brisbane, or Adelaide, or I'd be looking at really large major regional locations. And that's why Emily and I bought in Coffs Harbour. We have 3 properties in Brisbane and a unit block in Coffs Harbour, totaling up over the $5 million mark in terms of property value. And so in my opinion, there's lots of reasons to be bullish on the Brisbane and the Southeast Queensland market. There's the infrastructure boom. There's obviously the cherry on top, which is the Olympic Games out towards 2032. There's the population growth, there's the skilled workers and the diverse industries, and there's the established pockets where demand is continuing to flood in, where there's limited supply. So for yourself, if you're looking at buying your own home or an investment property, it comes down to finding the right property for the right price in the right location. So if you're looking to buy in the Brisbane market and you want to sit down and have a chat with myself, you can book in a free strategy session at purposeproperty.com.au. Leave a comment down below as to what you think's going on in the broader Australian market. Given this is a property market update, I love hearing people's thoughts. And if you're wondering when's the best time to sell your property, click this video over here. See you in the next one. Peace.